Imagine this for a second. There's this system quietly running the world. It influences oil prices, shapes government decisions, and even affects the cost of living in your daily life. Most people think it's the stock market or the banking system, but it's not. The real system behind global power is something far less talked about: the petrodollar. For more than 50 years, this system has been one of the biggest forces shaping the global economy. And once you understand how it works, geopolitics starts to make a lot more sense. To really understand the petrodollar, you first need to understand one simple thing: oil. Oil isn't just fuel for cars. It powers airplanes, ships, and trucks that move goods across countries and continents. It's used to produce plastics, chemicals, fertilizers, and even plays a role in electricity generation in many parts of the world. In simple terms, modern life runs on oil. Without it, the global economy would slow down almost instantly. Because oil is so essential, countries are constantly buying and selling it. Some countries, like Saudi Arabia, produce massive amounts of oil. Others, like Japan, depend heavily on imports to keep their economies running. This creates one of the largest and most important markets in the world, the global oil market. But here's where things get interesting. Oil isn't just traded freely in any currency. Most of the world's oil is priced and sold in one currency, the US dollar. And that didn't happen by accident. To understand why, we have to go back to the end of World War II. At that time, much of Europe and Asia was economically devastated, but the United States came out of the war in a very different position. Its industries were strong, its economy was stable, and it quickly became the world's leading financial power. In 1944, world leaders met at the Bretton Woods Conference and agreed on a new global financial system. Under this system, the US dollar became the center of international finance. Countries linked their currencies to the dollar, and the dollar itself was backed by gold. This created trust and stability, and over time, the dollar became the foundation of global trade. But things changed in 1971. That's when Richard Nixon made a major decision. He removed the dollar from the gold standard. This moment, often called the Nixon shock, transformed the global financial system. From that point on, money was no longer backed by physical gold. Instead, currencies became what we call fiat, meaning their value comes from trust in the government and the strength of the economy. Now, you might expect that removing gold backing would weaken the dollar, but surprisingly, it didn't. The US economy was still dominant, global trade was already heavily dollar-based, and countries continued to trust the system. The dollar remained the world's primary reserve currency. Then came a turning point in 1973, the OPEC oil crisis. During the Yom Kippur War, several oil-producing nations restricted supply to countries supporting Israel. Oil prices surged dramatically, leading to shortages and inflation across Western economies. This crisis forced the United States to rethink its strategy, and what came next would shape global finance for decades. The US made a deal with Saudi Arabia, one of the world's largest oil producers. The agreement was simple but powerful. Saudi Arabia would sell its oil exclusively in US dollars. In return, the US would provide military protection and political support. Because Saudi Arabia was such a dominant player in the oil market, other oil-producing countries followed the same model, and just like that, a new system was created, the petrodollar system. Here's the key idea. If oil, the most important resource in the world, is priced in dollars, then any country that wants oil needs dollars. That means countries around the world must earn, hold, and use US dollars to keep their economies running. Think about a country that doesn't produce much oil. To import oil, it first needs to acquire US dollars. It might do this by exporting goods, trading with the US, or holding dollar-based assets. This creates constant global demand for the dollar, regardless of where you are in the world. And that demand gives the US a unique advantage. It helps keep the dollar strong. It allows the US government to borrow money more easily and at lower costs, and it gives the US influence over the global financial system because so many international transactions pass through dollar-based networks. But the system doesn't stop there. There's another important layer called petrodollar recycling. When oil-producing countries receive dollars from selling oil, they don't just let that money sit idle. Instead, they invest it. They buy US government bonds. They invest in US companies. They put money into real estate and financial markets. So the dollars that flow out to buy oil often come right back into the US financial system. It becomes a cycle. Countries spend dollars on oil producers earn those dollars, and then reinvest them into dollar-based assets. This loop helps maintain the strength and dominance of the dollar over time. Now, the big question is, can this system change? In recent years, some countries have started exploring alternatives. Nations like Russia and China have been working to reduce their dependence on the US dollar. They've experimented with trading oil and other currencies, including the yuan and the euro. Groups like BRICS have also discussed creating systems that rely less on the dollar. But moving away from the petrodollar isn't easy. It's not just about switching currencies. The entire global system, contracts, pricing, insurance, and financial infrastructure is built around the dollar. It offers unmatched liquidity, meaning large amounts of money can move quickly without disrupting markets. It also provides legal and financial stability that other systems are still trying to match. That's why even countries that politically oppose the US often continue using the dollar for trade. It's not always about preference, it's about practicality. What we're seeing today isn't a sudden collapse of the petrodollar system, but a slow and gradual shift. Some countries are reducing their reliance on the dollar in specific situations, especially when facing sanctions or political pressure. At the same time, they continue to use it where it remains the most efficient option. So when you step back and look at the bigger picture, the petrodollar isn't just about oil or currency. It's about global influence, economic power, and the structure of the modern financial system. It explains why certain countries hold more power in global decisions, why the dollar remains so dominant, and why changing that system is incredibly complex. Once you understand the petrodollar, geopolitics stops feeling random. You start to see the patterns, the connections between energy, money, and power, and you realize that behind every major global decision, there's often an economic system quietly shaping the outcome.